I'm going to do the depreciation topic, but for the multiple choice question. Okay, look at the first question. The depreciation of equipment for the year was 200. Which journal entry record this? How to record the depreciation? What account to debit or account to debit? Credit. Okay. For the O, negative, positive. So you get negative 2x cubed. Marco, got the idea? Try. No harm.
Is it B?
Yes, answer is B. Debit income statement, credit provision for depreciation. Okay. What is the effect of providing depreciation? Your double entry debit income statement, credit provision. So this provision is under the SOFP. It will go to reduce the non-current asset. Non-current asset will be reduced. This debit income statement is a expenses. Expenses will increase, profit will decrease. So which will be the impact of the depreciation? America, what is the answer? Okay, yeah. So from this impact, which one you think the answer? What is that? Negative 5x power by 4. Power 3. Where you get 4? This is times. Okay. So next continue.
You reduce?
Yes, reduce the profit. Okay, Trisha, you look at the question and try to do it. If cannot, just put in the chat. So I will look into it. Now, next. The revaluation method of depreciation. You can take your book and do on your book also. The revaluation method of depreciation more suitable for the non-current asset. You have three methods for the depreciation: straight line, reducing balance, and the revaluation. Revaluation suitable for those that asset with a small value. What is that? The answer is negative 2x power by 4. Okay, correct. Put your answer in the chat. Revaluation method for the small value of the asset. So which one have a small value of the asset?
Those two?
Lose 2, yes. Okay. For number 4, a business use straight line method. You have cost, you have anticipated life, that means useful life, residual value. So if they give you this information, then you have to use the formula. Take the cost minus residual value, divide by the year. So calculate what is the annual depreciation charge. Aaron, put your answer in the chat for the.
$7,000.
You get 7,000. Okay, answer correct. 7,000. Tisha, you are there, So anything, you just let me know, You need to explain anything. Okay, now the next one. Number 5. Shafiq bought a machine 10,000, depreciate at the rate of 30% per annum, reducing balance method. What is the value after the 2 year? Net book value. Net book value means that take the cost minus provision for depreciation. So you have to get this correct, then only you can get the answer. Minus how much you get. This is second year. Okay, you get negative 40 cube. This one is 8x cube. Okay, can end your clock.
D. 6,000.
So your this first year, how to calculate the first year depreciation? First year depreciation is just take the cost times 30%. So we get 3,000. Second year depreciation, we have to take 10,000 minus 3,000 and then times 30%. So we will get 2,001. Okay. 7 times 3 is 2,001. So total now this depreciation is 5,100. So you take 10,000 minus. So you take this minus this because they ask for the net book value. This is a provision for depreciation. This is a cost.
Okay. 4,900.
Yes, 4,009. Okay, you all can take your book to do on your book so that easier for you next time to refer. You all have the book accounting for depreciation topic. Okay, the multiple choice. Okay, number 6. Peter bought a non-current asset for 5,000 and depreciate it at 10% per annum, straight line method. At the end of year 2, she sold for, this is a disposal. Okay, what was the profit or the loss on disposal? Think about, you can open the T account for disposal. Debit is a cost, credit provision for depreciation. Another one, disposal value. Your income statement in debit here, it will be the loss. If the income statement here, sorry, this is a loss, this is a profit. Okay, so you need to put in the correct position, then you can find. You need to calculate this on provision for depreciation. The cost is this one. This is a cost. Depreciation, end of the year 2. Straight line method. So what is the amount here? Your bank, this is a sold value, 4,001. Cost is 5,000. What is the depreciation, accumulated depreciation? Anyone? Straight line, take the cost times the percentage. At the end of the year 2, that means year 2 times 2 year, because every year are the same. So what is your this amount?
$100.
Pardon?
1,000.
You get 1,000 here. Let me count. 5 times 10 times 2. This is 500. Okay, 1,000. So this is 1,000. So total 5,001. This is 5,000. So this one profit 100. So donkey. Okay, next. Okay, question 7. You use your book to record to do under the depreciation topic. JAMA treat purchase of loose tool as capital expenditure. On 1st July, his loose tool was valued at 7,001. On 1st September, he bought new tool cost 1,002. On 30th June, he valued loose tool at 6,000. Which amount appear in the income statement? The meaning of this one, they are asking you, what is the depreciation? What is a formula for the revaluation method? What is a depreciation for loose tool revaluation?
Cost minus residual value divided by
Cost plus new purchase minus closing. So your this opening 700. This is the cost for the balance breakdown. And then your new purchase 1,002. Your value end year, this is a balance CD, minus 6,000. So what is your amount?
100.
You get 100. 7,100, 1,200, 8,300, minus 6,000, 3,002. The depreciation should be 2,003. Okay, now let's move on. Question 8. Why depreciation provided? What is the purpose of depreciation? See, Trisha, what is your 8?
To spread the cost of an asset over its useful life.
Yes. Okay, to spread the cost over its useful life. Okay, here the club. Okay, club you haven't learned yet, but this is like normal, assuming like a normal business. The key thing is talking about the depreciation. So how we going to calculate under the valuation method? Just now I have put in actually one of the question for the valuation. So what is the answer for it? One of the questions just now related to valuation. Trisha, Susing?
C.
Okay, it was C. The answer is correct. Opening balance plus new purchase minus closing balance. Okay, now let's move on. Question 10. Okay. Question 10. Here, depreciate 10% and then bought the new 800. In error, she debited repair account. Supposedly, this one under non-current asset, but go to under expenses. Okay. What was the effect of this error on the profit for the year? This one supposedly 10% depreciation. 10% means that 80. But now go and record expenses 800. Depreciation, we didn't record. So means that this is the understate. Okay. Expenses here, we wrongly debited means overstate. What is the net effect? For what purpose? Okay, go ahead. Go. This one under, this one over. What is the net effect? This one short, expenses short by 80. This one expenses over 800. What is the net effect?
720
Over or under for the profit?
under.
Okay. This one, net is a expenses over 720. So this over profit will be under. Yes. Okay. Now move on. 11. Take notes. Calculate monthly. This one 10% per annum. After 18 months. So what was the profit on the disposal? Disposal account. Cost, provision for depreciation, bank. Your income statement can be here or here. This is a profit. This is a loss. Calculate whether this or this one. Anybody? The most important is how to calculate this depreciation for 18 months. They say 10% per annum. The 10% from here. 10,000 times 10%. 1 year. Annum means that 1 year. This calculate by month. 1 year, 12. You need to calculate 18 months. Get your this one correct, put inside. Then you should be able to count this one. Trisha, what is the answer? Anyone? Put in the cost. Put in this amount. This amount, I already show you the working. Bank is this amount. Calculate the differences.
$1,500.
You get 1,500. Let me count. I think the calculator. 10,000 times 10% times 18 divided by 12. 1,005. Okay. This one 1,005. This one 10,000. This one 9,200. So how much your profit? How much your profit or loss?
700.
Yes, 700. Okay, question 12. What was the accumulated depreciation at the end of the year? So here you have method 15% reducing balance. Formula for reducing balance. Take the cost minus provision for depreciation. And then after that, times the percentage. Calculate, they say, this one calculation is the depreciation for the year. The question is say accumulated depreciation end of the year. This one you have to take balance brought down plus the current year depreciation. Your this current year is this one. Your balance brought down is this one. Calculate the amount.
$3,033. 300.
You get B.
B.
Okay, answer is B. So your this calculation take the 12,000 minus 1,008 and then times 15%. Okay. Get this amount already, put into here, plus your this 1,008. The answer is this one. B is correct. Okay, now let's continue. Okay, question 13. You have 7 books. Do you remember the 7 books? Which book of prime entry was used to transfer the 300 to the income statement? And how was it treated? This credit side is a loss. Sales journal is to record the credit sales. List of the credit sales in a month.
General journal as a loss.
Yes, correct. General journal as a loss. Credit is a loss. Debit is a profit. Okay, question 14. Anastasia purchased equipment 28,000 on 1st Jan. If depreciate policy is to use reducing balance method, what was the net book value? Net book value is that cost minus provision for depreciation. Okay. Be careful with your dates. This is the 206. This is 2017. You have to calculate depreciation for 2016, 2017. Find your accumulated depreciation. Then you will get the answer. Me what? Calculate your depreciation for 2016. Calculate your depreciation for 2017. Your first year
11,002.
is 28,000 times 20%. So we get the amount. Let me count first. 28 times. So this one 5,006. Second year 28,000 minus 5,006 because this is a reducing balance times 20%. So we get 2,800 minus 5,006 times 20%. So this one is 4,480. So total we get 10,000. Your cost, so calculate the net. So what is your net number?
17,920.
No, 28,000. This one ah?
Yeah.
Okay, correct ah. Okay. 15. Okay. Arisa purchased motor vehicle cost 23,000. She decided depreciate motor vehicle strict line method 20%. Depreciation on the motor vehicle 4,006 was charged to the income statement for the year ended. How much was charged to the income statement for the year ended? This is the first year because you bought on this year. Financial beginning year, end year in here. This is the first year. Second year, depreciation. This method, straight line method. So what is your second year depreciation? Straight line method. Depreciation calculation, how to calculate? Tricia, what is the answer?
B.
Yes, answer is B. Depreciation for straight line, every year same amount. So the answer is B because first year is 4,006. Okay. If not, you can take this amount times 20% also, which is same amount every year. Okay. Now next question 16. Ambrick started a business on 1st Jan 2017 and purchased a machine cost 18,000. He decided to depreciate the machine 20%. This method reducing balance method 20%. No depreciation was charged in the year of disposal. And the machine was sold on 1st July. This 1st July 2018. How many years? This is a second year. This one, first year end is 31st December 2017. This is the first year. So this one will be second year. Second year, they say that no depreciation. So second year, don't need to count depreciation. So what was the profit or losses? Open disposal. Cost here, provision for depreciation here, bank here. If your income statement amount here, this is a loss. If your income statement here, this is a profit. Calculate. So second year don't need to count because they say no depreciation was to be charged in the year of disposal.
A.
You get A losses. Okay. The cost is 18,000. The provision for depreciation, this one, Because this is only 1 year. So you take 18,000 times 20%, which is 3,006. Bank amount 13,000, 13,300. So the total in here we have 13,300, 13,300 plus 3,006. So we get 16900. So compare these two. So we will get the loss. Take this one minus this one. We get the loss. Okay. Try to write down the working on your book. So at least you got the copy next time to refer. Okay. Now I move. If you all got anything not copying, let me know. I put it back, or you can refer to the recording later. Okay. Now I move to the next. Question 17. Look into it first. Okay, 17. A food retailer purchase computer, debit the cost to purchases. This is a cost of sales. This is a non-current asset. What was the effect on the profit for the year? This one accidentally go to the purchases. Cost of sales will increase. When cost of sales increase, gross profit decrease. Gross profit decrease, profit will decrease. Non-current asset understate. Asset will be understate. So what's your answer?
D.
Donkey. Profit understate, asset understate. So both also understate. Okay, now next. Okay, question 18. Here, financial year end 31st. 1st Jan 2015. This is the first year. The machine was depreciated 15% per annum using straight line. Straight line means that every year are the same amount. Okay, same amount. The machine was sold on first. This is beginning of the year. That means the last year will be 31st December 2018. So from here to here, how many year? 2015, 2016, 2017, 2018. Total 4 year. Okay. Now, what was the book value? Book value means that cost minus provision for depreciation. So what is your this amount? Anyone give the answer? See, what's your answer?
D.
You get D. Okay, let me count. Your cost is 18,000. Okay. Your provision is 15%. So 18,000 times 15% times 4 years. So we get 18,000 times 15% times 4 years. So this one is 10800. So minus 7,002. Okay. Now let's continue. 19. A trader always depreciate his motor vehicle using reducing balance method. Always depreciate using this. Which accounting principle is he apply? This always use the same method. Always use the same method. Marco, what is the answer? Trisha, what is the answer?
A.
Yes, consistency. Same method, consistency. Okay, 20. Which one is a capital expenditure? Capital expenditure is non-current asset. Which item consider non-current asset?
Building costs,
Building costs,
air conditioning,
got two type. Air condition system for the original workshop and the new workshop.
new workshop,
Yes, new workshop. Some more.
decorating the new workshop,
Decorating for the new workshop. New workshop. Okay. So you have how many items? You have 3 items. The answer is not correct. Still got some more.
legal fee,
Pardon? Legal fee.
legal fee,
Okay. Any more? Any more? Got answer or not? Okay. What is a air conditioner system? Air conditioner system means that maybe last time your shop, okay, your shop is just one aircon. You fix one aircon in your original workshop. Now you want to you expand your this new workshop extension. Extension means that another new workshop. You are using the air condition system. Air conditioner system means that you ask people to from the old workshop plus the new workshop, all the piping, all your piping for the air conditioner, you go to integrate it. The whole office, old office and the new workshop, you integrate this system. you fix the condition. Some of the aircon, you notice that they are like four, like a box on. The air can blow here, blow here, blow here, all side. So this type of air conditioner system, normally they can, you see the, what is that? The Eon aircon. Okay, you notice the Eon aircon is like, have a big piping. This type of normally is a running by integrating system that we call air conditioner system. So this type of system is considered non-current asset. So even though this is the original, but this one counted because this type of system normally is expensive. It's a more toward improvement. So what is your answer? Which one is your answer? Marco?
E.
C. Okay. This one, and this one. This legal fee refer to the new building cost. Normally, we want to build the building, we have to get lawyer to sign all the agreement or do any documentation, get the approval to build the building. All this one under the legal. Okay, question 21. A non-current asset depreciate at the end of the first year of ownership using straight line method. Straight line means same value every year. It was therefore that reducing balance method 30% should be used. This is the first year. Use the first year calculation, depreciation under the straight line, cost minus residual value divided by the year. You get the value for this method. Now you found out that this should be used reducing balance. Reducing balance, first year, how to calculate? Take the cost times the percentage. Get your depreciation. What was the effect on the profit of the correcting? See what is the differences and then think about whether your profit increase or decrease. What is your depreciation for straight line method? What is the amount for this one? Straight line method.
Line method 4,000.
Yes, 4,000. Okay, now the cost here, first year, your this first year, the cost is 20,000 times 30%. So this one will be 6,000. 6,000. This effect, this ones we charge 4,000. Now we realize that we should charge 6,000. So what is the effect on the profit after we adjust it? Decrease or increase the profit?
Decrease.
Decrease. Because we charge 4,000, actually supposed to be 6,000. So we have to add another 2,000 as the expenses. Yeah. Last question, 22. Okay, machine 1,000. at 1st Jan 2019. The machine was expected last for 4 years and has no residual value. And on 31st December 2019, the same machine cost 1,002 to purchase. At which value should the machine be included in the statement of financial position on 31st December? You look into the date. When you buy, when you do calculation for depreciation.
E.
Donkey. This asset you bought in beginning year. So you have to calculate 1 year depreciation. Okay. This one, end of the year, you buy this asset last day of the year. If the depreciation policy saying that asset whole end of the year should be count, they mean this asset we have to count 1 year depreciation as well. So this is one of the way in business. If you foresee your profit for the year is high, you can do this method. You end of the year or before or close to the end of the year, you go and buy the asset. Go to buy a lot of non-current asset, and then you calculate the depreciation. So when you add in this depreciation, end of the year you buy this one. Your depreciation increase, your expenses also increase. Expenses increase, this will make the profit decrease. This is one of the way people reduce the profit in the business. Got it? Clear? Done?
Yes.
Okay. Now we have done the first set for the depreciation topic. This second set, you take your time and do it. Now I want to go to another section. Give me a minute. I open the file first. Okay, this is another chapter, other payable, other receivable. So for other payable, other receivable, you have to watch out the date. The date is affecting your calculation. Okay, now look at the question. Susan received a check from a tenant on 10 December 2011. This rent due to business for the period 1st Jan to 31st March, this amount. Means that this is a prepaid. Okay, because he received prepaid rent receivable or receive rent receive prepaid of receive in advance. Sorry, this one should be received in advance. Because it's an income. Receive in advance. This one pay for the following year. Rent receive in advance. So from the business when we receive in advance, for this year end, this is a liability, current liability. So now the question asking, how is this treated in the Susan financial statement? This financial statement, since they just put accrued or prepaid, they are talking about SOFP, statement of financial position, whether it's a current asset, current liability, current asset or current liability. Current asset A current liability, it will be the accrued expenses or prepaid income. Current asset will be the accrued income or prepaid expenses. So for this amount, rent received in advance is which one?
Prepaid income.
Yes, prepaid income. So this is a liability. Okay, number 2. This sentence saying that there was a debit balance brought down on the insurance account. This amount transferred to here. 2013 January 1st, balance brought down. That is what they say, debit balance brought down. So what does this represent? So what do you understand with this statement?
Insurance prepaid on 31st December.
Yes, insurance prepaid on 31st. This one, where is it sitting? Sitting in here. Okay. The debit balance means that debit more than the credit. Okay, next move on. Number 3. A business has not adjusted its financial statement for insurance prepaid at the end of financial year. Insurance prepaid is a current asset. By right, we should debit other receivable and credit insurance. Okay. But we didn't do the adjustment. So what happened? Other receivable is a current asset. Insurance is a expenses. Expenses affecting the profit. So we didn't do this adjustment. So what is the effect on the profit? Insurance didn't adjust, insurance over. Expenses also over. What happened to the profit?
Understate.
Yes, understate, understate. Current asset is this one. We didn't do this recording. So what happened to the current asset?
Understate.
Yes, understate. So answer is donkey. Okay. Now let's continue. Okay, question number 4. The following balance were brought down on a rent receivable account. Rent received during 2012 was 15,000. What amount should be shown for rent receivable in the income statement for the year ended? This one is the income account. Okay. Put in your opening and closing. Debit, credit. Where should you put? This account, debit, credit. Where is the amount to put? Here, debit, you put debit. But here, credit is referred to 1,000 opening balance. This one, balance CV, 1,000. So from here, rent received 15,000. So what is the income statement amount?
$12,000.
You get 12,000. Okay. Here, 15,000. Okay. The amount to find income statement amount, because this is the income account, the rent receivable income account. Take 15,000 minus this 2,000 minus 1,000. So the answer is 12,000. Okay, next. Okay, question 5. At 1st Jan 2013, a trader owed beginning of the year. Owed means that current liability. End of the year, this is paid, means bank. Open your wages account, put in debit credit side. End of the year, owed is a balance CD. This one is also current liability. So how to put debit and credit?
$4,002.
You get 4,002. Okay, let me count first. So this one, 1,000 here, beginning of the year. And during the year, paid 4,000. And then end of the year, balance CD also owed 1,002. Okay. So they want to find income statement. This is an expenses account. Expenses account income statement is in here. So you take this one, 5200 minus this one. So you get 420. So the answer is C. Okay. Now let's continue. Question 6. How much rent was payable for the year ended 31st December 2013? Open a simple T account. Put in debit side or credit side. Put in your rent payable account. Open a simple T account. Rent account. This one debit or credit? Oats.
Credit.
Credit. This is a balance BED. 400. Rent paid for the year ended this one. This is the bank. Bank 1700. Rent paid in advance means that you pay for the next year. End of the year. Pay for the next year. This is a balance CD 250. So they say that how much rent was payable for this one? They're asking for the income statement. Calculate.
1050.
1700
I
minus
said 1050.
1050. Okay, the answer should be A. Okay. Next is 7. An insurance account show an amount paid. So calculate, please. Open the simple T account for the insurance. Put debit and credit side. Amount paid, prepaid, end of the year.
Credit entry 1600.
Credit entry 1600. Okay, the pay amount is 2000. End of the year prepaid at prepaid end of the year balance CD 400. Okay, the income statement correct 1006. But which entry appear in the insurance account record? Okay, they are asking this account, that means credit side is correct Credit entry 1600. Okay, next move on finish this topic, then we can stop. Question 8. Isa pays 750 on 1st October. 15-month insurance. It means from here 1st October 14. 15-month means that 30th September 14. Another 3 months, October, November, December, until 31st December 15. Okay, so total this is 15 months. So which amount for insurance appear in his statement of financial position on the 31st January? This one pay for what? Statement. Wait, let me read first one more time. So the following year, September. This one is On the 31st. Wait, let me read one more time. I feel confused. He paid on 1st October 20 for the first 15. So 30th September 15, October, November, December. Total 15 months. Appear in the statement of financial position on the 31st January. Oh, yeah, sorry. Their financial year turn 14. 31st January 15. And then 31st December 15. Okay, we need to calculate is this one, which is from the 1st February 15 to 31st. How many months? Total is 11 months here. From here to here, October, November, December, January. Here is 4 months. So we need to calculate this 11 month because this appear as a prepaid insurance. So we take 750 divided by 15 times 11. Calculate this. So what's your answer?
550.
It's 550. So they are asking for this question, they are asking for the prepaid insurance. Okay, now next. Question 9. Lose one. Rate are 100 a month. Rate is a like license we pay to the MBK. 1 month 100, that means 12 months is 1 year. So means 1,200. He pays 6 months in advance. So this is current asset. On 1st Jan and 1st July. So means that what they mean by in advance is that 1st Jan he pay. Okay. Total pay for how much? 600. And then after that on 1st July, he will pay another 600. Okay, because 1 month 100, 6 months will be 600. He also received 6 month rent of 150 a month in advance on the same date. So receive means that rent receivable. So this one is income. This one is expenses. Okay. Now the question is, which amount appeared on the 31st January? Let's see. So your financial year end is 1st Jan. Okay, you're going to receive the payment. So let's see. I need to count first. So 31st Jan. So from here to here, this one is only 1 month. Okay. So this 1 month that we pay, 5 months consider prepaid. So we calculate, we get 500. Okay. So this prepaid expenses prepaid, this is a current asset. Whereas this one, 150. Okay, we receive on 1st January. That means 5 months receive in advance. So this one will be 150 times 5. So we will get 150 times 5. 750. This 750 we receive in advance is a liability, current liability. Whereas the July, we don't take into account, we don't bother because that one is the following financial year. We only focus on the 1st January because the financial year end is 31st January. Okay, we receive before this date. So the answer should be current asset. This is prepaid. This one received in advance is a liability. So the answer should be B. Yeah. Now I move on. So you can refer to recording later. Question 10. Omar financial year end 30th September. He has paid 2,000 on 31st March 2015 for 10 identical to run monthly from April to January. So when he paid on 31st March 15. This is paid. And this one pay for which period? Until January, mean 31st January to 16. Okay, this one equal to 10 months. Financial year end 30th. So on this date, 30th September 15. We have to count how much the prepaid. This is the expenses. Okay. Whereas this one is a income statement for the expenses. Calculate this amount. Calculate this amount. From here to here, how many months? From here to here, how many months? Then you will know how to calculate this. Calculate this.
Income statement 3 months, and then prepaid expenses 4 months.
Okay, this one from April, May, June, July, August, September. So this is 6 months. And then this is 4 months. So we use the 10 month to divide. So the amount 2,000 divided by 10 times 6. This one 2,000 divided by 10 times 4. So 2 times this one 800. So the answer, this one. Expenses 1,002, asset 800. Okay. Can move? So I go to the next. Okay. Question 11. During 2015, John made a payment of 1,002 for insurance for 12 months to September 30th. Then after that, which amount appear in the John financial statement? It's statement of financial position. So financial position on 30th June 2016. And this one pay until 30th September 16. How many months? How many months of it?
3 months.
3 months. So calculate 3 months equal to how much?
$300.
Yes, 300. This 300 is a asset or liability? Asset or liability?
Asset.
Asset. Prepaid insurance is a other receivable. Okay, it's a asset. Now next is 12. At the start of year, Basi has paid 4,500 rent in advance. This is rent in advance. This is asset, current asset. During the year, he paid the rent 12,000. At the end of the year, he owes this one current liability. So put in your rent correct position, then you should get answer. Calculate the annual expenses. Annual expenses mean the income statement. How much? Calculate this.
$15,000.
3,000. The answer no tell. Let me see. Start year, rent in advance. Okay, pay rent in advance. This one balance went down, 4,500 here. During the year, pay bank, 12,000. End of the year, he owed, means balance CD, 1,500. So total add up. How much? Let me count.
15,000.
15,000. Okay, 15,000. No, not 18,000. This total add up 18,000. Okay, now let's continue. Okay, question 13. And statement of financial position include the following. So which one consider other payable? Other payable is a liability.
C.
You get C. Okay, let's see one by one. An amount paid by N for the service which has not yet been received. Paid by N, which service not yet. This is the other receivable, which is this one paid for by, this is so-called what paid by N for service. That means is other receivable has not yet been received. Okay, so this is a prepaid expenses. Okay, other receivable. An amount received by N for a service which N has not yet provided. This is the prepaid income. Okay. The value of a service received by N for which payment has not yet been made. So value of service received by which payment has not yet been made. So this one is actually accrued expenses. They already used the service but didn't pay yet. So they want liability. This is current liability. These two are the liability. Okay, now next. Okay, 14. Insurance prepaid 1,200 was treated as accrued in the income statement. Insurance prepaid is a current asset. By right, should be other receivable. This accrued is the other payable. So which effect it has on the profit? By right, this insurance, when we have prepaid, we have to credit out. Okay, this is a balance CD. But now we treated as accrued. What happened is that we didn't put this one. We go and put it here, balance CD, 120. This is wrong. So what is the effect on the profit? How to adjust this error? First, we need to reverse the error. Reverse out this error. After that, we have to put back the error. So how much the total, the adjustment? 240. So we have to do debit, suspend, and then credit. No, sorry, this is accrued in the, okay, we can just put the, debit, not debit suspend, debit other receivable and credit insurance, which is 240, 240. This one is before adjustment. So when we didn't do this one, we put into here. So basically, our insurance over by 200. This is before adjustment of the error. Our insurance over 240. Expenses will also increase 2040. So this one will make the profit decrease 240. So decrease means understate. So understated by 240. Okay. Get it? It's a bit confusing, but just try to pick up, okay? Now, next, 15. This is the income to Mahindra. Fee prepaid, haven't provide service, we already get money. So this fee, prepaid starting is a liability, 2120. Fee received from the client, debit or credit. Fee owing end of the year. Balance ED, 2840. This one, debit side or credit side? Fee received. And this is a fee, is an income account. Your income statement should be debit side or credit side? Okay, calculate. You put this one correct, then you should able to get this income statement amount. If you put wrong side, then you won't able to get. So your this amount, 42,150, should be debit side or credit side? Anyone? Trisha?
Debit.
Other?
Debit.
Credit. Bank. 42150. Because this is an income account. Income account, income statement here. Bank is here. These two fixed, it will not change for all the income account. So calculate your income statement.
47,110.
Yes. Okay, now next page 16. Amelia rented two. That means this is a rent receivable, which is the income account. Rented premise to a tenant. This is the income to Amelia. Okay, end of the year. End of the year, Amelia financial year, the tenant has paid 2 months in advance. End of the year, pay in advance. This is a current liability. So you need to think which entry will Amelia make in her ledger. So already say this is a rent receivable. So that means only these two possible, C or D. This is a current liability.
Credit the rent received.
Okay. Here, rent receivable. Double entry, this one must be bank here. Income statement in here. If you have 2 months rent paid in advance, it's a liability end of the year. Balance CD in here. Bring it to here, become balance BD. This question saying how he going to record this one. Here record and then transfer to here. Debit rent receivable account, this amount, and bring to here as a credit balance. This is called credit balance. So the answer is donkey. Okay. The question is actually asking about balance CD, balance BD. Okay, let's continue. Okay, question 17. An advertising expenses has a credit balance 100. So credit balance means current liability. This one beginning of the year, balance brought down. During the year, the advertising expenses paid means bank. This include 45 for the following year, means balance CD. This is current asset. So which journal entry required transfer the advertising expenses? You need to find advertising account for the income statement amount. Calculate this. So what do you think?
C.
Yes, see. Here, current liability, because they say credit balance. So balance brought down 100. During the year, hey, bank 2830. This include for the following year, balance CD asset 45. So you take this minus these two, then you will get the answer C. Okay. Debit income statement, credit advertising. When we read accounting, when we read double entry, we read the header. We are not reading the inside. Okay, now next. Okay, 18. Insurance paid by a business include 400 relate to owner. The moment's private use. What is the account? Risha? Private use. Lucy, what is a private use account? What is the account for private house, private use? Anyone? Marco? Private house, private use. What is the account record this private house?
Business entity.
Drawing. Drawing account. Okay, now next. This amount was not included in the income statement. We didn't charge this 400 under the income statement as expenses. Why we do that? Matching, talking about the cost and the revenue. Cost incurred, revenue earned. Business entity, talking about the business and the owner. Recording. Duality, talking about debit and credit. Prudence, talking about profit or the asset cannot be overstated. So the moment you saw the private use, business entity. Okay? No sound. Oh, quiet. Okay, question 19. Open your simple T account for the stationery. This one has a stationery value. This is the balance brought down. 45. During the year, purchase. So bank amount 200. On 31st, she transfer to income statement. Income statement. What was the balance? Balance CD. Careful, the question asks for the 1st January. They are asking this amount. Calculate this.
$51.
51, yes. So debit 51, take notes, be careful with the date they given. If the question asks for the 31st, 31st December, it will be this one. The question asks 1st January is this one. Okay. 20. Watch up the date. The date given, calculate.
$6,000.
That's 6,000. Debit or credit?
Debit.
Yes, debit. Know how to find, because of the date, all this, They say financial year end this one. First is pay rent 8,000. So bank is 8,000. For the 4 month ended 31st. So here 4 months, your financial year end 31st December 19. And then 1st Jan 20. And here is up to the 31st March 20. So this one, 1st January 19. This is 1 month. This is 3 months. Okay. So you have to divide by 3 months and 1 month. So this one will be 6,000. So this is considered prepaid. Okay. Prepaid balance CD here, balance BD here. Because this one is this date. So 6,000 debit. Okay, now next 21. At least financial year end on 31st December. The balance on her book on 1st Jan 2020 include the following. This both also income account, which is receivable, both also income. But beginning of the year, this balance brought down. Debit is asset, current asset. Credit is a current liability. Take those. So what do this balance represent? Which one?
Commission received income outstanding.
Okay, commission receivable, income outstanding. Rent receivable, credit. Current liability, prepaid. Okay, so income outstanding means owed by the somebody. So this is the asset. Okay, last question. 21. I still got one more. 22, sorry. Okay, at the end of the financial year, Raminder made adjustment, rent owed by the tenant. So this is an income. Income outstanding. How did this affect financial statement? Income outstanding, we have to debit other receivable and credit in rent receivable. This one affect the current asset. This one affect the profit. So which answer?
The profit increased.
Okay.
Then
Profit
the increase.
increase. So the answer is donkey. Okay. So we do until here. We have done basically 2 sets. So the balance and the balance of this question, you can try yourself. Okay.
Okay.
Okay. So we can end here.